Good morning and happy Monday. Good to see all you guys. Welcome back to the Daily Grind. I'm your host, Jump Change. This is live and recorded. If you guys have any questions during or after the fact, please leave it in the live chat or in the comments below. Let's see who's here on this bright and early Monday. Let's see. Nerd Beast, Kyle Rosa, good to see you. Sadie, sometimes. Andrew Masad, Nick K, Dom G, my man. Dumpster Fire, good to see you. We have Zapirate. Let me get off of top chat. All Set Miner, I don't understand why YouTube does that. Why would you not want to see the whole live chat? I don't get it. It's just like an automatic thing. They put you on top chat. Makes no sense to me. Anyways, Steven Cicero, good to see you. Tim I Am Crypto, Dan R, my man. Let's see anybody else I may have missed. Chris Hanley and Dad is here. Max Voltage, good to see you, buddy. All right, so today, Bitcoin ended September in a, what is it, a 5% up actually, which is pretty cool. And then we're supposed to have Uptober, which is typically the month after September, where price rises back up to, you know, normal prices. But we're actually seeing some pretty good stuff in the market. So we're going to go over Altcoin Daily's video talking about averting the government shutdown. I honestly have not watched it, so I don't know anything about it. And then the market's being manipulated. I'm pretty sure you guys already know all that. Anyways, lights are green behind me. Let's get into it. See what we're looking like today over on Coin360. 28,000 Bitcoin. It is nice to see it out of the 27 area. It's 28,242. We have Ethereum 1726. Ethereum Ethereum futures ETF is approved today. So we're gonna see what happens. The price action shouldn't move really, to be honest. It's just trading on the future of what the coin could be, not the actual spot price of said coin. So it shouldn't affect the market at all, to be honest, but it's still cool. It's a step in the right direction for Ethereum. We have Litecoin looking at 67 bucks, BCH 244, Dogecoin 6 cents, almost 6.5, XRP 52 cents, not too bad. Let's check out Crypto Bubbles. Give me 1 second. There we go. That's why I sounded weird. These headphones like mute the like surrounding area around me. I can't hear myself talking. I was like, why do I feel like I'm stuffy? All right, let's see. Dan Ruggs Cypher, good to see you, buddy. He's just tagging everybody in the chat. Good to see you, man. Let's see. Again, if you guys have any questions, feel free to ask. Crypto KJ, good to see you, buddy. All right, let's check out Crypto Bubbles. This is on the week. What is the biggest earner on the week? It looks like Pulse right here. Pulse Chain is up 30.3%. Everything is pretty much up. Render is at 11.9. It's at $1.72. Shit, man, I should have bought into that. I knew I should have too last week. Damn, that sucks. It was at $1.54 or 55. Anyways, on the day we have BSV 16.8% up. Not too bad. We have Pulse up 6.8 today. Pulse Chain. Rune is Thor Chain up 15. What was it? 15.7. We have XEC. What is this? eCash. eCash. Why have I heard of that? I don't know what this coin is, but I have heard of this. 10.4%. So everything's looking pretty good actually. And Render's up 7.4% on the day. And Roll Bitcoin just about 10%, 9.9. Not too bad. Let's check out the Fear and Greed Index. Don't want to blind you guys. We are at 50. So dead center, middle of the scale. See where it brings us, I guess. I think this still needs to be more pain, but we'll have to see. All right, top 10 coins by coin market cap. Then let's get into this. Bitcoin, Ethereum, Tether, BNB, XRP. We have USDC, Lido Staked Ether, Solana, Cardano, and Dogecoin. Litecoin still in 15th. Shiba in 18th. That's Max's favorite coin, guys. Please pump it. Max would be very much appreciative of you. All right, let's see. Breaking. Bitcoin pumping after government shutdown averted. I want to see what this is about. And guys, I want to show you real quick. See this button right here? This is the thumbs up button. It takes 2 seconds, just like that. Boom. Hit that thing if you wouldn't mind. I appreciate you. Mr. Dan Ruggs Cypher, thanks for becoming a Chump Change VIP. Appreciate you, buddy. All right, let's dive into this. You guys have any questions? Ask in the chat. Let's go.
I have very good news for the country. Democrats and Republicans have come to an agreement, and the government will remain open. We will have avoided a shutdown.
Breaking.
Oh, wow.
A government shutdown has been averted with just hours to spare. Congress passes a 45-day funding bill, which funds the government through now November 17th. And with the
Does that just mean we're printing more money? Is that what that means? Can anybody clarify that for me in the chat?
crypto market rallying in response to this, how will this 45-day extension affect you.
Good evening to you. I'm Tom Ziska. We're glad to have you with us. We begin with that breaking news from Washington. Congress came together on an 11th-hour deal tonight to pass a short-term spending bill. The agreement avoids a shutdown for now.
So the bill allows the government to stay open for another 45 days. It was literally passed just 3 hours before the 12:01 a.m. shutdown, which would have happened. It was then signed late last night by Biden, and in his direct quote, he says, "Tonight, bipartisan majorities in the House and Senate voted to keep the government open, preventing an unnecessary crisis which would have inflicted needless pain on millions of hardworking Americans. This bill ensures that active duty troops will continue to get paid, travelers will be spared airport delays, millions of women and children will continue to have access to vital nutrition assistance, and much more. This is good news for the American people." Of course, the bigger question, because this just kicks the can down the road, what should we expect on November 17th if a more permanent solution can't be agreed upon, i.e. if a government shutdown happens then?
That was a perfect analogy, just kicking the can down the road, because that's literally all that's happening. That's literally all that's happening. And I love how they bring women and children into it to make you feel bad about the situation.
Government's finances
or like feel like they're the good guy, rather. That's what I meant to say.
Aren't exactly in good shape. The U.S. has a credit rating just like you. And in August, it took a big hit. One of the 3 major credit ratings agencies, Fitch, downgraded the status of the U.S. from the highest AAA to AA+ in only the 2nd downgrade in the nation's history. It's like you going from a perfect 850 credit score to closer to 750. The purpose of Fitch's downgrade was to sound the alarm that the financial health of the government is in question. And one big reason why is repeated government shutdowns. In the past decade, the federal government has shut down 3 times, in 2013, 2018, and for a record 35-day stretch again from the end of 2018 to early 2019. Those 3 instances had a big impact on the economy, costing American taxpayers nearly $4 billion.
So obviously, a November 17th government shutdown would stifle the U.S. economy in a huge way. Average people all around the country would have less money to spend. And by the way, maybe that's exactly what Fed Chair Jerome Powell indirectly wants. I mean,
Real quick, Dan Ruggs, thank you so much for the $2 super chat. I actually shut the guy off from talking, but it says, Dan Keller and I touched ledgers. I saw the picture of you guys hugging with your Dynex's shirts on. You guys are ridiculous. And if you guys didn't see, actually, that video I dropped yesterday, Mr. Yeti is over, or was over in Austria. He's flying home today. He kind of breaks down a lot about Dynex, which is cool. Kind of cleared up the air on some stuff, and me and him are going to get together and talk about that in a later video, probably in the next couple days or so, if I had to guess. But let's get back into this.
United States inflation is still incredibly sticky, even creeping back up in this last month. Also not close to his 2% end-of-year target. After all, that is why he is raising the federal funds interest rate to quell that down. But a government shutdown would indirectly do that job quicker. And again, maybe this again gets solved. Maybe in 45 days, we'll have a more permanent solution. I'm hoping.
Yeah, right.
But if a solution is not reached, here's what you should expect.
Okay, so what does this mean for you? Thankfully, many of the government's operations, like sending out Social Security and Medicare checks or food assistance benefits, don't have to go through this annual approval process, so you'd still be able to get those payments on time, even if the government shuts down. But other parts of the government are left in limbo. For example, thousands of federal employees would get furloughed, meaning they're temporarily laid off and their paychecks are delayed or suspended. Government employees who provide essential services like air traffic control or law enforcement do have to keep going to work, but they might not get immediately paid. National parks might close or shut down some services like trash collection, visitor centers, and public bathrooms. And passport offices, which are already suffering from major delays, could get even more backlogged. The government stays shut down until lawmakers in the House and Senate come to an agreement and pass those funding bills. And just like you would have to make better financial choices to boost your credit score, the government might need to break the bad habit of shutting down to get its perfect rating back.
And keep in mind, Bitcoin doesn't need a vote from Congress to decide its monetary policy going forward, meaning no government controls it, meaning Bitcoin has an open, permissionless, and 100% verifiable monetary policy. That's one of the reasons we're seeing the buying. We're seeing the rally in the market. And just looking at the data, as we've been reporting, Bitcoin spot trading volume today has dropped to a 6-year low, meaning people are more interested in holding their coins, believing in their future value, than selling at the first sign of profit. So volume is minuscule. Price.
Well, it just means people are waking up to the fact that BlackRock's going to have a spot Bitcoin ETF in the next, like, I don't know, 3 to 4 months. Mr. Dan Ruggs, thanks for the $3 super chat. I'm not going to read that, but that is hysterical, and I can't believe if you actually did that, that's hysterical. Let's see. Game with Smokey Dan said, am awake for this live. Was catching up on those I missed. Did you see Gary was getting grilled about the Clintons? He in deep crap for sure. No, I have not seen that. So I'm going to have to look that up after. Let's continue this, see what else he has to say here.
Action looks dead. And checking back in on some of these metrics, to me, very revealing. Here's Bitcoin's 200-week moving average heat map. And what this shows us, in each of Bitcoin's major market cycles, Bitcoin's price historically bottoms around the 200-week moving average, and how this can be used. Historically, when we see orange and red dots assigned to the price chart, this has been a good time to sell Bitcoin as the market overheats. Periods where the price dots are purple and close to the 200-week moving average have historically been a good time to buy. And
that's a cool chart. Look at that. It's in deep purple right there, which would be a good time to buy. That's kind of cool. That's kind of cool. But yeah, so someone in the chat said, let me see, Jason Mining said BlackRock's interest will make BTC hit 100K. I agree. I do agree. It might take some time for it to get to 100K, but overall, the interest that's going to peak in the average Joe, that's the factor here that we need to understand. People that are just investing into, say, stock markets or whatever else it may be, just, you know, things that they are government backed. They're not, you know, they don't have to self-custody Bitcoin. Like, that's kind of like the thing that scares people off. So the fact that BlackRock's going to be getting into it and feels comfortable getting into it, I think it's going to allow a lot more big spenders to come into the space where they can safely hold Bitcoin, which they won't really control. BlackRock will control it, but they're going to make money off it for sure. So people are going to be dumping some bags of money into it. That's just my opinion.
Looking at where we are today, Bitcoin's actual price is pretty damn near the 200-week moving average. This has historically been a great time to buy. We hardly ever, even in the most bearish of bear markets, we have hardly ever dropped below. Now, of course, everything is possible. Cool. We spent weeks below the 200-week moving average earlier this year. But for times in the red or times in the yellow, that's a great time to sell. Times in the dark blue or purple, historically, great time to buy.
Does anybody here trade? Just wondering in the chat. Let me know if you guys trade and if you guys put in like long or short positions. I'm wondering if a lot of people are going to be putting in like small long positions that aren't like leveraged really high where you could gain 2x easily, you know, if it just goes up a bit. I don't know. I'm interested. I might throw in a small trade. We'll see.
And the market is neutral, meaning not fearful or greedy. The market doesn't really know how to feel, probably because how much of an unknown macro is in the short term right now. But like we've reported, when in doubt, zoom out. And 2020.
Yeah, there's way too many catalysts this year to like, you know, to have people or to have that fear and greed index thing be anywhere near accurate. It's been dead center forever. There's just so much shit happening. You know, the spot ETFs, election year, just literally everything that's right here on the screen actually.
Before has so many bullish catalysts for Bitcoin. Potential spot Bitcoin ETF,
coming up.
Potential rate cuts, US debt buybacks, aka stimulus. It's an election year. It's a halving year. What did I miss? Well, you missed the fact that in order for Bitcoin to go up in price, people need to buy more of it than sell it. And when no one has any money, as the economy is in the mud and continues to trend that way, Bitcoin goes nowhere but down, LOL. Ah, yeah.
Look at that. Juice Ben hit that nail right on the head. Shout out to him.
Yes, except for the many trillions farming yield, waiting for better opportunities in the money market funds.
Sure too.
And to prove this, according to the investment company Institute, the total money market fund assets increased by 17.7 billion to 5.64 trillion for the week that ended September 13th, 2023. So this just happened, proving again, there is an unknown in this market today. People don't know whether they should be greedy or fearful or where Bitcoin will be short term. All of this is an ongoing story. The minute I get more information, I will make a video. I will keep you updated. Hey, if anybody's in...
he's just going to be chilling his new show. Well, shout out to Altcoin Daily for that, because that's, I mean, that was a pretty good video, actually. There's a lot of shit that's going on right now that's going to change the overall outlook of Bitcoin in the next couple months. It's going to be nuts. It's going to be nuts. Yeah, that's really all I can say. It really is. There's so many driving factors, like the spot ETF. That's, like, I have a feeling it's going to be huge, but not right away. I think it's going to be huge right after the halving, where people are putting money in, like smart money is going to come in. Do you know what I mean? And people are going to be like, right after the halving, typically we usually see like a buy the rumor, sell the news type deal, right? So it might just kind of lag after, but I think that's when the big guys are going to be throwing the money in, and then we're going to have to see a rise probably a year out from after the halving, but who knows? I mean, everything is so up in the air. It's just crazy. But today, again, the futures ETF for Ethereum is coming out, which is pretty big. So I want to get some news on that eventually. And guys, I'm going to show you this right here, this like button. You just hit that. Appreciate you. All right, let's get into this. Markets being manipulated. Here is what you need to know. Let's do it. I'm going to put this at 125. If it's too fast, guys, let me know. I don't think it will be because he talks kind of slow. But let's get into it.
Crypto markets are manipulated. Yep, it's pretty clear that large players are fiddling prices to our detriment. The only question is, how much? Well, a recent report by crypto research firm Solidus Labs has some of the answers, and it tackles two of the biggest issues the crypto industry faces today: insider trading and wash trading. So today we're going to summarize this report and tell you what it could mean for the crypto market. The report we'll be summarizing today is aptly titled, quote, "The 2023 Crypto Market Manipulation Report." It was published by Solidus Labs back in June, but it's safe to assume that its facts and figures haven't changed much since then. We'll leave a link to the report in the description if you're interested. Now, as hinted at in the introduction, the report is divided into two parts: insider trading and wash trading. So, the insider trading report begins with a brief introduction wherein the authors state the obvious. If crypto wants to see adoption, we need to know how much market manipulation there is and fix it. The authors also touch on the ETF filings we've seen over the last few months, and this is more significant than you think, because one of the main reasons why the SEC hasn't approved these ETFs is because it believes that the crypto market is manipulated. Now, whether this is true for Bitcoin's BTC is up for debate, but when it comes to most...
I mean, let's be real. The crypto market, it's 100% manipulated by the big guys. Like, there's no doubt in my mind that that's happening. It has to be happening. There's no way it's not happening. Like, how do you think they make their money? You know what I mean? There's no chance that a lot of guys, a lot of BTC aren't in cahoots somehow, some way to crash markets and lift markets. It's just how it goes, man. It's rich get richer. You know how that is.
Altcoins, the science seems to be settled. The authors...
Yeah, exactly. It's not just BTC either. It's all markets. It's all markets, and only few get caught. You know what I mean? That's the thing.
Found that a whopping 56% of ERC20 tokens listed on crypto exchanges in 2021 had evidence of insider trading, including on major crypto exchanges. This is to be expected, considering all the insider trading lawsuits we've seen since then. Not naming.
And also, yeah, Dan R said, "What's the difference between stock market and crypto?" Yeah, there isn't any. It's again, it's just only certain people get bagged. Wasn't there somebody in like the somebody high up actually got bagged not too long ago? I think it was a lady. I can't remember who it was. If anybody knows what I'm talking about, please let me know. I'm not like a huge stock market guy, but I heard that somebody got hit for insider trading. I can't remember who the hell it was now. Whatever. Anyways, let's continue.
Names. What's crazy is that the authors seem to have identified a sort of insider trading cartel. 51 interconnected wallets seem to be responsible for most of the insider trading after these tokens listed on major exchanges. What's annoying is that the authors don't say which exchanges they analysed. If you're wondering what the authors counted as insider trading, well, the answer is any wallet that repeatedly bought a token a few days or hours before it was listed on a major exchange. What's interesting is that the subsequent insider trading was done on DEXs, not SEXs. Now, there were only a few cases where members of this insider trading cartel sold their tokens on the exchanges where the tokens listed. The authors suspect this is because these insiders were concerned about being flagged by insider trading detectors on these exchanges. Well, glad to know that they have these things anyway. Anyways, the authors go on to provide a case study of one insider who traded 14 listings using DEXs and 22 more using SEXs. Funnily enough, this insider trading wasn't nearly as lucrative as you might think. The insider spent $2.7 million to earn an estimated profit of $300,000. Should have just hodled. Now, in all seriousness, this large amount of working capital suggests we're not dealing with a run-of-the-mill retail investor here. We are likely dealing with a wealthy individual investor or an institution, possibly even a seasoned criminal. If your name is Sam Bankman-Fried, then you're allegedly all of the above. Sorry.
Why is he eating a cucumber like that? What is happening? Oh my God. Anyways, so this the trial with that butthole starts today, or I think this week, right? I think it's this week. But why I'm still confused as to why he's eating a cucumber like that. That's you just set yourself up for failure when you take pictures like that, or you allow things like that to happen. Like, what are you doing?
Couldn't resist. Now, another interesting finding in this case study was that the supposed insider converted all of his or her ill-gotten gains from USDC into USDT. This suggests that the wealthy individual, institution, or seasoned criminal in question is operating somewhere offshore, i.e. not in the United States. Alternatively, it could just suggest that the entity in question is concerned about having their ill-gotten gains frozen by Circle. For those who don't know, stablecoin issuers can freeze your stablecoin holdings. Tether has actually frozen more stablecoins than Circle, which makes the USDT swap seriously odd. Speaking of which, if you want to make sure you're not losing extra money with every trade, check out the Coin Bureau deals page. It's got up to $40,000 of airdrops and bonuses in addition to the biggest discounts on trading fees.
Let me turn it down a minute. All right.
In any case, the authors speculate that the entities in question are token issuers, market makers, or investment firms, not far off from the kind of folks I mentioned a few moments ago. What's fascinating is that the authors identified 54 additional wallets these entities created specifically for insider trading. As you might have guessed, that's because most of the transactions going to or coming from these wallets are related to tokens that are about to list or have just listed. And the authors note that the entities that control these wallets have used multiple methods to try and cover their tracks. These include privacy protocols like Tornado Cash, smart contract-enabled privacy coins like Secret Network, and crypto exchanges that don't enforce KYC. As it so happens, we covered Tornado Cash and Secret Network in a video a couple of years ago. It's in the description if you're interested. Boy, does time fly. Now, in their analysis, the authors speculate that there's a fourth entity that could be engaging in insider trading, and that's the crypto exchanges themselves. Now, this is an accusation that's been levied against select crypto exchanges in the past. Obviously, not going to name names here. Now, to their credit, the authors admit that some of these wallets could just have been lucky. From our perspective, it's also possible that there's just a handful of entities that are doing the insider trading, and the other wallets are just copy trading. You've probably seen threads about these wallets on Twitter. Sorry, I mean X. Anyhow, what all these wallets have in common is that they seem to have had access to material non-public information, or MNPI. From the author's perspective, only token issuers, market makers, investment firms, and crypto exchanges have access to this kind of information. Then, in the next section of the report, the authors discuss DEXs, which they refer to as being, quote, game changers for insider trading. Not surprisingly, the authors found that the presence of DEXs seems to increase the frequency of insider trading due to the pseudonymous nature of DeFi. To put things into perspective, the authors provide some statistics. Insider trading before earnings announcements for publicly traded companies happens around 5% of the time, and insider trading before mergers and acquisitions of publicly traded companies happens around 20% of the time. You'll recall that insider trading for crypto is 56%, and that's just for ERC20 tokens. Insider trading for crypto tokens on other blockchains could be higher. Note, though, that the authors do not note this, but the presence of DeFi whales on some blockchains suggests that this is in fact the case, not naming names. Regardless, the authors seem to give a warning to these insider traders by reminding them that blockchains may be pseudonymous, but they're publicly viewable and all transactions are traceable. They imply that they'll hunt down the insiders using their advanced blockchain analytics platform. On that note, if you're wondering how blockchain analytics companies track your crypto transactions, be sure to check out our video about that using the link in the description.
Sorry to interrupt you folks, but I have to let you know about the Coin Bureau deals page.
Oh,
now, my team and I have been...
Nope, I'm going to go to the next. Right here.
Anywho, you'll hopefully recall that the second part of the report pertains to wash trading. Now here, the authors start with a few eye-opening statistics. Since 2020, liquidity providers on Ethereum have wash-traded over $2 billion of crypto. Again, that's just on Ethereum. Imagine the other chains. And consider the other numbers. 20,000 tokens, wash trading in 67% of over 30,000 liquidity pools the authors analysed, wherein wash trades accounted for an average of almost 15%. And if that wasn't bad enough, the authors believe that the amount of wash trading on DEXs on Ethereum is even higher. That's because all of this wash trading only accounts for 1% of the data the authors analysed. Now, if you're wondering what wash trading is, the authors explain it perfectly. Quote, wash trading is a form of market manipulation in which one entity simultaneously buys and sells the same asset, creating a false impression of market activity despite the trade reflecting no change in beneficial ownership.
Again, if you guys haven't seen the, was it Max Maher's video where he made basically talking about how they have bots trading against each other inside these platforms to make it seem like the trading volume and activity is higher than it actually is. It was a very good video. I've mentioned it a few times actually, but you guys should go watch that if you haven't. It's Max Maher on YouTube. I'll look for it right now. Just put a link in the chat.
Particularly trading with yourself. As with insider trading, there are a few known offenders when it comes to wash trading. These include centralized exchanges, crypto market makers, individuals, especially in the case of NFTs, and token deployers, aka the team. Gotta love that teamwork. The authors then point out that wash trading on DEXs is extremely expensive due to on-chain fees, but can nonetheless be profitable. That's because wash trading on a DEX increases the chances of a centralized exchange listing, and that makes it possible to do insider trading. To drive the point home, the authors then unpack the two types of wash trading on DEXs. They're actually pretty straightforward. The first type involves providing liquidity and swapping using one wallet, whereas the second type involves multiple wallets which are often controlled by the same entity. The authors estimate that under half of the wash trading is done using just one wallet, and just over half of the wash trading is done using multiple wallets, in case you were wondering. Now, as with the insider trading, the authors provide a case study for the wash trading, and they pick an easy target, SHIB Farm. According to the authors, quote, it had no website, roadmap, or public offering to credit for the rally. Instead, its creator relied on investor FOMO about a similar meme coin's rapid rise. The week before, Shiba Inu, SHIB, had rocketed 2,500% almost overnight. Ah yes, the good old days. Note,
yeah, can it please do that again? Can anybody hit the replay button on that?
That you can find out how to spot a shitcoin using the link in the description. I digress. But back to SHIB Farm. Now, whoever created the shitcoin used two tricks to pump its price. The first was to make it impossible for new buyers to sell, and the second was to use a network of wallets to give the impression that there were multiple buyers FOMOing into, quote, SHIB's second coming. The authors estimate that the fake dog deployer tricked a total of 50 traders into FOMOing in and made an estimated profit of over $2 million. Now, logically, this means that these 50 traders weren't exactly retail investors either, and I, for one, would absolutely love to meet whoever has millions to throw at obscure meme coins. Anyway, here is where things get spooky. According to the authors, whoever created SHIB Farm went on to create 50 additional shitcoins, including ShibaSwap. Now, it's unclear if this is the
He's saying shitcoins a lot. I'm kind of shocked, actually.
Same ShibaSwap that's now being used by thousands of Doge-obsessed traders. It would be really nice to get clarity on that one. Concerns aside, the authors go on to explain that wash trading in DeFi is both detectable and preventable. They argue that DeFi protocols could implement similar technologies to those used on centralized exchanges to stop wash trading. On-chain analysis can also identify suspicious liquidity providers. Now, this all brings me to the big question, and that's what all of this means for crypto. Well, the short answer is that it's not good news for DEXs. Come to think of it, though, it's rather surprising that the report focused exclusively on insider trading and wash trading on DEXs when it appears to be more common on SEXs. If you watched our video about the analysis Forbes did about sketchy trading volume on centralized exchanges, you'll know that up to 50% of BTC trades on exchanges are fake, at least according to Forbes' rather questionable criteria.
And again, I put that link in the chat if you guys are interested in watching that. That video, he explains a bit of that trading volume stuff. It's very eye-opening, to be honest.
To be fair, this is an improvement on the 95% figure they found back in 2019. However, this report and the one done by Forbes reveal something that's much bigger than fake trading volume, wash trading, or insider trading, and that's bias. Both reports seem to have a slant to them, and neither of the two seems to be perfectly accurate, though Solidus Labs did do a good job. In the case of the former, it seems to imply that DEXs are hotbeds of market manipulation, while in the case of the latter, it seems to imply that centralized crypto exchanges are hotbeds of market manipulation. Clearly, both have an invisible hand in the crypto market, but DEXs are arguably the lesser of the two evils. That's simply because all transactions on DEXs are publicly viewable and therefore traceable. Sure, we still don't have the tools to identify every malicious actor on-chain, but innovative crypto analytics companies, such as Solidus Labs, are working hard to build these kinds of solutions. To crypto analytics companies, centralized crypto exchanges are a black box, however. Once a coin or token is sent to an exchange wallet, there's no telling where that money goes or doesn't go. Only exchanges have that data, and if you're dealing with an offshore exchange, chances are that you can't verify where it went. This is why you could argue that DEXs are, or rather will be, even less prone to market manipulation than centralized exchanges in TradFi markets. That's
Can I real quick? So like offshore exchanges, I want you guys to just be aware. There's so many scams going on where these scammers will create a fake exchange that's not like legit, and you hear it through like, I don't know. It'll be either like somebody will reach out to you, like a scammer will reach out to you. You think it's a normal person, or you'll just hear it from somebody. There's a bunch of fake sites. Like, please just make sure you guys look into these sites before you just go and deposit money into them. Because I personally know somebody that just got scammed of a lot of money, and it's super sad and it's unfortunate. But I mean, I saw the red flags right off the bat. But it's kind of like if you're not in this every day and you don't understand what exchanges should look like, or you know, like you don't know how to search your own transactions, there's, you know, you could definitely get scammed easily. So just be careful, please.
Because transparency is a better regulator than a small group of people who are often bought and paid for by the entities they're supposed to be regulating. As the authors of today's report pointed out, in DeFi, there are ways to apply regulations at the smart contract level. This is a bigger deal than you might think, because the fact that these regulations are on-chain means that you can easily verify which DEXs are safe and which ones are not. In case you missed the memo, Ethereum developers are working on exactly this kind of technology. Developers on blockchains like BNB have gone one step further by adding this functionality to the blockchain level. Of course, both technologies come with their own sets of concerns. The key takeaway is that DEXs in crypto are slowly but surely finding ways to mitigate market manipulation. The same is true of CEXs. Meanwhile, in TradFi, the fines for market manipulation have effectively become a cost of doing business. Look no further than JP Morgan for evidence of that. Now, of all the issues that crypto has, market manipulation is one of the most solvable, and it's one that will be solved sooner than people think. Once that's done, it will quickly become apparent that crypto has much bigger issues that must be addressed, such as centralization, privacy, and censorship resistance. Most crypto projects and protocols fail on all three of those metrics. Some would say it's about time that we started making more reports about just how bad these issues are. Hopefully, cutting-edge crypto analytics companies like Solidus Labs will lead the way.
Shout out the guy over at Coin Bureau for that. All right, so I was just I was gonna watch another video from Guy, but I love him to death, but man, gets me sometimes. I want to see what this is about. I was just looking up this Ether ETF that's happening today, or supposed to happen today. So let's see. Bitwise launches Ether-themed ETFs. Let's see. I kind of want to watch this. I kind of want to see. You know, let me see if I can find this on YouTube actually. Before we go too far. Let's see. Bear with me for a second. If you guys have any questions, feel free to ask in the chat. I want to see if they have it here. Let's see. No, whatever. Maybe we'll just try to watch it from their site. I don't know how this is gonna go. Let's see. Let's see if it plays. Should, I think. I hope.
Largest crypto index fund manager in America, Bitwise Asset Management, has two new Ethereum-themed ETFs that will start trading today. The Bitwise Ethereum Strategy ETF and the Bitwise Bitcoin and Ether Equal Weight Strategy ETF. And joining us right now to talk about it is the Chief Investment Officer, Matt Hogan. Matt, thank you for being here with us today.
So this was just posted like 30 minutes ago.
This is a huge shift for the SEC. They've been pretty hostile to any offerings that come along with digital assets like this, but they lost a case, and this is the result of that.
Well, it may be the result of that. It may be the result of the passage of time, but it's absolutely true that they've changed their tune. We've had really constructive dialogues with the SEC over the last few months, and that's led up to today, where we have AETH and BTOP launching, giving investors their first ever access to Ethereum in an ETF wrapper. It's an exciting day, and I think it spells good things for crypto going forward.
How do the ETFs work?
Sure.
What are you getting?
Absolutely. The ETFs hold futures, so regulated futures. AETH holds 100% Ethereum futures, and then BTOP 50% Bitcoin, 50% Ethereum futures. The beautiful thing about futures exposure is A, it's regulated, B, you can put it in an ETF, and C, it's highly correlated with the actual spot returns. We expect correlations of 0.99. They would be very similar over time. It's not a spot product. We'll get to that eventually, but it's really a great tool for getting exposure today.
Why would somebody own this instead of just owning Bitcoin or Ethereum straight out? Especially, I mean,
God, I'm so proud of her for asking that. That's amazing.
I realize that this is the lowest charge for anybody, but it's still 85 basis points, and that's not cheap.
That's absolutely true. It is the lowest cost ETF for a traditional open fund launching today for Ethereum. People can buy Ethereum in an app on their phone, and that's great for many Americans. But a lot of people want the convenience of buying it in their brokerage account, right next to their stocks and bonds. And it's particularly important for financial advisors, RIAs, and investment professionals. An RIA can't buy Ethereum on an app for a client, but they can buy it in an ETF wrapper, and that unlocks a huge market for crypto. Those folks control something like $20 trillion, so it's a major unlock for those people.
What about?
So I don't know if you guys have any like if you guys have like life insurance or like term life policies or like what the hell do they call those people? They're not, are they they wouldn't be financial advisors, would they? Like people from like New York Life that you have like this, you know, you'll sit down with a guy and he'll more or less like get you situated with your Roth IRA or your insurance, again, like life insurance, whole life policies, term life policies, things like that. People like that getting into the space, being able to help people get into Ethereum or Bitcoin, like that's going to be huge. That's a big deal.
The Bitcoin spot ETF, I know there are at least 10 companies that have applications pending. Who's going to get it first? What is the timing on these things? Because the first mover advantage is expected to be pretty significant.
It is massive, and Bitwise has a filing live at the SEC. Of course, I can't talk about that specific filing, but I do think we're making progress. I expect we'll see a spot Bitcoin ETF this calendar year. That's not a guarantee, it's not a promise, but the dialogue with the SEC has been improving and the trends are moving that way. Look, 2 years ago we had no crypto ETFs. Then we got Bitcoin futures ETFs. Today we're getting Ethereum ETFs and blended ETFs. The next stop is spot Bitcoin, eventually that spot Ethereum. We're going to get there, and the progress is accelerating.
There's only a few months left in the year. What you really think it's that soon?
I'm hopeful. I'm hopeful. I think there is a real chance. If not this year, then early next year. Of course, no guarantee, but we're making real progress. We just submitted 40 pages of research to the SEC answering their questions. So I am optimistic, and this is an opportunity for investors to invest today.
But you're going to be...
That's wild. DJ in the chat said this is a nice way of saying broke people buy the coin. Yeah, you're not wrong. You're not wrong. So like, see, most people aren't, I guess, disciplined enough to put in, you know, X amount of dollars every week consistently. When you have a, say, like a Roth IRA, take out, say, just for shits, like $100 a month out of your account, and it goes into this investment thing for your retirement, right? That's a lot easier for people to deal with than for them to personally be like, okay, I'm going to take this $20 and spend it on, say, you know, a stock or Bitcoin or Ethereum or whatever the case may be, versus taking that $20 and accidentally spending it out, you know, a night on the town or on a couple beers or, you know, going to have dinner and tipping the guy $20. Like it's a lot more, you know, self-reservation that you need to be able to do things like that and discipline versus just, you know, the other way around. So yeah, he is being nice about it for sure.
Going up against some very well-known names, BlackRock, Invesco, companies that have lots and lots of client assets. Why do you think you'd win against them?
I think it's great those big players are coming into the market. But the thing that's different about Bitwise, not only are we the largest index fund crypto manager in America, but every day 64 people at Bitwise wake up and just think about crypto. These large managers may have a small team, 3, 5 people. Maybe they have a new person from college who got really excited about crypto in school. but we cover it every single moment and been doing it for 5 years.
Very quickly, we have to run, but the Sam Bankman-Fried trial, is that good news or bad news for what you're seeing? Does it scare people just based on the fraudulent claims against him?
You know, the amazing thing is I think it's old news. There was a lot of chatter about that with our clients until the day BlackRock announced it was launching or trying to launch a spot Bitcoin ETF.
Thanks.
That wasn't all clear. Sam Bankman-Fried is in the past. We can cover the lurid details.
But would they go with a BlackRock instead of a company that sounds like FTX, a new company where it's supposed to be an expert? I mean, if BlackRock's emergence into that was something that would help.
It's very helpful. We have an incredible track record. As an example, we never invested in FTX. We never had their token. We never invested in Luna. So I like our chances. I welcome BlackRock in the market. I think they'll get their share. I just also think Bitwise will get its share, and we're in the market today launching these Ethereum ETFs. It's pretty exciting.
That's crazy. Dude, that's awesome. Oh boy, what's happening? Uh-oh. Uh-oh. Nope. Don't need to watch Crypto World. That was last week. Yeah, that's crazy. What do you guys think about this whole thing? That's nuts. Absolutely nuts. Overboard Tech, what's up, buddy? Good to see you. Good to see you. And yes, I was in your live stream last night while you were testing graphics cards from Hot Crypto that were left on his floor in his car. God damn it. Fuck. Can't take them anywhere. Well, guys, Bitcoin, Ethereum, everything's looking good right now. I mean, again, Ethereum futures ETF is today. Hopefully this, hopefully it plays out well for Ethereum and prices stay high. Let me see what you guys are saying in the chat. Patrick Murphy should have used a hot air unit. You silly Billy. What are you saying, Patrick Murphy? This is dad joke. Dad jokes? Is that what's happening? All right, let me see what else you guys are saying in the chat. How many easy mining packages have you purchased this weekend? This weekend, I didn't purchase any, actually. I did do easy mining, like the Team Gold. I did it more or less every day last week, a couple times, to see how good it was. I hit one time out of like the entire probably 20 packages I bought or something. Yeah, so it wasn't, I mean, to me, it is what it is. It's a shot in the dark. You know what I mean? You're made to lose. That's pretty much how it goes. You're against the odds, but if you hit, you hit. I still think it's fluff, to be honest, on the whole 99% to 100% bullshit, like, or 0 to 100 on their bars there. But hey, whatever, to each his own. Everybody wants to believe what they want to believe. It is what it is. So I hope it's legit for everybody's sake, but again, who am I just work here. All right, do you guys have any last questions before we get out of here? Actually, I'm going to be doing a video on the KS0 today, so I got to do the firmware update, and I did get my new power brick, so I don't have to worry about the KS0 frying or melting the power brick. Yeah, so we're going to be doing that. I'll be recording that at some point today, but I do have a bunch of work on my truck I have to do, so that's going to be extremely interesting. The Bees Crypto. Dude, I haven't seen you in forever. How are you? How are you? He said gambling is gambling, and yes, it is. It is. It's bittersweet though when you hit. When you can do it with everybody else, it's fun. I feel like something bad's gonna happen though with that whole thing. I don't think it's gonna be around for very long, but I hope it is. It's a neat factor to the crypto space for sure. Let's see. Financial Failure says, have a good day, dude. Appreciate you, buddy. Thanks for being here. All right, guys. Again, it is Monday. Hopefully you guys have a great start of the week. Hopefully it goes well. Don't fight with your boss. Don't get fired. And have a good day. I'll catch you guys bright and early tomorrow morning around 8:15 Eastern Standard Time. Have a good one and peace out.